Hi everyone, today we're going to talk about taxes. Womp womp. But seriously, if you are serious about buying property in Costa Rica, it's something you need to know and we need to talk about. And don't worry, it's not all bad news. Hi everyone, Sarah Breitlander with KRAIN Luxury Real Estate, and today we are going to talk about the last thing that comes to people's mind when they think about buying in Costa Rica. Seriously, could there be anything more opposite than the awesome beaches and the beautiful jungles of Costa Rica than taxes? But it's something that we need to talk about and that I like for all of my buyers to know before purchasing property here in Costa Rica. So there are 3 taxes related to real estate that you need to know about, 2 of which are basically buyer taxes coming in, and 1 of which will be a seller tax going out that I want you to be aware of before you even purchase. So let's get started. What are the 3 taxes? Number 1, we have property taxes. So property taxes is, I love when my clients ask me this question because they're always so pleased with the answer, especially my clients from the US and Canada. So property taxes for a home here in Costa Rica, you're taxed at 0.25% of the purchase price. That is 0.0025. That is, in other words, for every $1 million spent on a home, you are paying $2,500 per year. A lot of my clients are like, is that a month? No, that is per year. So it's one of the great benefits for buying in Costa Rica. The holding costs are very low, and for that reason alone, some of my investor clients buy here, and land banking can be a very viable option for some people. The second tax that you need to consider is the luxury tax. So the Costa Rica government did make a decision to tax luxury homes. That money does go to the public school system for education of its people. So it's kind of hard to argue with that. And it is on luxury homes. What classifies as a luxury home? That is more difficult for me to answer because it's not as clean cut and simple as, for example, the property tax question. It's basically, in essence, based on a cost to build analysis, meaning it does not take into account location, in what town it's located, that property value, the land value. It doesn't take into account view. It doesn't take into account market value. Only cost to build, and more or less, más o menos, as we say here in Costa Rica, more or less, if it costs to build, I think it's $350,000 or more to actually build it, then you're subject to a luxury tax. It's based on a sliding scale and a little bit more of a complicated analysis. So we can't tell you up front what that would be just by looking at the home, but essentially that's should already be registered and paid for by the current owner of the home. So when my clients come down here, they know what the property taxes are going to be already. That's an easy calculation. And then we go and we look at homes, and we can tell pretty quickly whether the home would be subject to a luxury tax. And then once we know it is, we can just ask the agent, if you're serious about buying the home, to disclose the luxury tax payment, right, that they make. You have to register every 3 years for this luxury tax. It's also very nominal compared to what my clients pay in Canada and the US. I've literally never had it hinder a purchase, and I've never had it lead to someone selling their home because they didn't like or couldn't pay the luxury tax. But it exists, and I like my clients to know about that. So those are really the 2 main taxes you need to know about, and that as a buyer. But also, I like to disclose to my buyers, let's foresee in the future, right? I mean, it would be you don't want to pigeonhole the process, and I think it would be unwise to just look, at the buying process. You want to look at the whole picture. So Costa Rica does have a capital gains tax that's applicable to our sellers. Again, it's cheaper than what they're expecting in the U.S. or Canada, but that sales tax is usually 15% of the gain of the home when you go to sell your property, whenever you go to sell your property. Remember, that's 15% on the gain, not the sale price. And so, of course, you want to, you are allowed to take into consideration all of the expenses involved in the purchase, any closing costs, any attorney's fees, any rehab projects you've done to the home. The goal is to get those expenses in so you get that capital gains down as much as possible, right? But it is 15% on the gain. There's a limited exception to that. If you go into another tax method, it could be 30%, but 99% of my clients fall into that 15% capital gains tax. If you have any questions, feel free to give us a call, and we're happy to answer those for you. So that's really what it is, what it encompasses for buyers. Now, one thing I'd like to say at the end, if you are considering buying a home here and not just using it for personal use, maybe you want to come down here and live full time, awesome. Or maybe it's just for you and you don't want it to earn income when you're here. Again, we have those clients, awesome. But if you want the home to generate income when you're not here, in other words, if you want to rent it out as a long-term rental to a family, or if you want to rent it out as a short-term vacation rental to vacationers, then some other things you should consider are income tax and sales tax. That's another discussion for another video, but again, I like my clients to go in fully aware of all of the tax laws and their structures. And if you're interested on income tax and short-term vacation rentals in Costa Rica, please click the video beside my head and you can figure out more information on that, because we love to share as much information as possible. Thank you so much for watching. Feel free to call us. We'd love to be your realtors here in Costa Rica. Ciao for now, and Pura Vida.